Morning, Vikas, and thanks so much for joining us. Lots is happening in the market right now. You have the Moody's downgrade coming in from US. On the other side, you have China that's cut its lending rate. Give us a sense of how you are expecting all of this to fundamentally impact our market. Where are we headed on the sentimental front, and what's the market construct looking like from the near to mid-term for you?
A lot of uncertainties have been around, but many of them have got cleared. And, markets are full of uncertainties always, as we know that things keeps coming, right? So, I've never seen in market when there's no uncertainty around, and that is there. But broadly, I think two major, tariff and, the border escalation, both are, more or less behind. But at the same time, I think, generally speaking, I'm quite, kind of, positive on the Indian markets because India growth story continues to remain fine. There are no major sort of risks around from a fundamental perspective. Now, any news flow can develop, which can create short-term volatility, which cannot be kind of controlled. So, net, I'm not feeling very negative about markets. I think the key trigger could be how the BTA between US and India progresses and what are the early newses around that. If we get a good outcome on that, probably market might rally. But in general, generally speaking, I think markets are in a good shape. FI flows have picked up, activity in general have picked up. So moods seems to be kind of reasonably all right. And so hence I don't see much volatility. But never say you can never predict short-term risk. Always it comes from the sources you don't expect, and it comes from when you don't expect.
Right. Very good morning to you, Vikas. Cheryl also joining in the conversation. Given the fact that a lot of these uncertain news pieces are actually out of the way, some sort of a clarity or semblance actually coming in when you talk about the global markets. But tell me one thing, if one has to read between the lines the way how the US economy is shaping up, wouldn't that actually pose to be a concern for export-oriented companies, especially the IT sector in particular, given the fact that we are now talking about the ballooning deficit, the debt levels being high. Also, there are some sort of indications that there are some delinquencies when you talk about credit card payments in the United States as well. When you talk about all of these scenarios, you think you can be positive and continue to hope things to get better going ahead, and especially when I talk about that the Indian IT sector that will get impacted the most.
All these three things about US economy you've been talking about, have not surfaced with the rating downgrade. It's been around for more than 1.5, 2 years. I know. I mean, US debt, deficit, or for that matter, in delinquency in their credit card has been around for 2 years. So I think very often we tend to call these situation, but nobody. Fact of the matter is nobody knows what time US economy will get into recession, what kind of it will peak out. So I think. And generally speaking, IT sector, in my opinion, is not, I mean, we've seen IT sector has been reasonably all right, growing well in last 3, 4 years. And these kind of intermittent cycles come in any sort of industry. We are not very negative on IT sector. We've been saying for quite some time and continue to remain positive because IT is not only necessarily linked to economic growth, because a lot of digital transformation has to happen, the cost rationalization has to happen, and IT is a key enabler of that. So I think there are many more levers other than only the economic growth. A lot of times companies have to spend money in order to just survive, forget about grow. So I think and some of the sectors which are in the manufacturing front where India is exposed, not much exposed to US, there India stands to benefit from the market share gain, which is happening because of China plus shift. And that I think can compensate for if economy slows down. Currently, there's no such sign, but if that slows down, and market share gain can compensate for that. So I don't see US economy slowing down as a major risk to Indian economic growth. Market sentiments can go up and down depending on how the news flow comes, but I don't see major economic risk if US were to slow down to India.
So that brings me to the follow-up question. You did say that there are a lot of other manufacturing themes also that one can watch out for, given the fact that you will have the China plus one strategy also at play that could benefit some of them. So which are some of those sectors that one should watch out for very closely, given the fact that we are actually trying to get some sort of strength back home in those sectors?
Sector broadly remains same. We've been quite positive on banking and financial services. We've been positive on manufacturing. We've been positive on the entire pharmaceutical space. So in general, I think we've been very positive on the spaces which are aligned to Indian economy. And generally, that's what is kind of happening. So sectors and economy really don't change very often because India is in a very structural transformative growth cycle, and this is going to last for long. So the only thing is that which will grow faster. So at this point in time, we are significantly overweight, in banking and manufacturing, I said. And, and there are sort of sectors within consumption you pick up. There are, sorry, stocks within the consumption you pick up. There are stock, excuse me, in the IT sector, in the mid and small cap space, which are doing well. So I think, it boils down to, so these are some of the sort of areas of exposure that we do have.
All right. Hi, Vikas. Good morning, Shrishti this side. And Vikas, I think that after your visit to Omaha, where you did visit the Berkshire Hathaway shareholder meeting, we are connecting now on the channel. Give us some sense that what has been the major key takeaway, because this shareholder meeting was indeed a special one, because from next year on, you might not see Warren Buffett taking the center stage.
I don't know that whether next year he will be there or not. He's still chairman. So, I mean, you will learn a lot from the legend, and we all know that he's a legend. So, and I think all the learnings are definitely around. He's been very, very big believer of long-term investing, compounding, associating which stands out with associating with good quality people, whether it is, as an employer or whether it is a partner. I think that he has been espousing for a very, very long time. So I think quality of people you associate with is a very, very important. It stands out in his every interaction. So there are lots of takeaways one can take from when you meet Oracle of Omaha. He's a legend, right? And plus how disciplined he could be, even if despite having so much cash on the books, how he's been and how he's transitioning to the next level of leadership. The moment he realized that he's kind of slowing down in his decision making, he's very happily to kind of letting it go. So these are some of the quality you admire him as a person, you admire him as an investor, you admire him as a leader. So there are lots to learn. I mean, one can probably do an hour show on that.
Certainly, but because what sort of a sentiment that you are picking up when it comes to the foreign institutional investors, especially for India? Because of late we have seen the FIs making a strong comeback, especially in the cash segment. Do you believe they are here to stay after what's been happening in the globe across?
I mean, FI flows are going to be very robust. The moment Indian Fed rate starts coming down, whether it comes in 3, 6 months, it will find a next level of acceleration. But anyway, dollar index itself has kind of paved the way for flows towards emerging markets. And so I am very, very optimistic and positive of foreign flows towards India in particular, emerging market in general. And today, I mean, the foreigners weight towards India is about 1.6, 1.7%. Even if they were to become equal weight, a very large amount of money will come, which could be $1 trillion plus over next 8, 10 years. So I think I'm very, very positive about that flow, and I don't have any doubt. I don't think foreigners are thinking negative about India. It is just their asset allocation or country allocation which changes, and which I think which has started already moving, and it will only accelerate in times to come.
Okay, and Vikas, also want to get your view on the earnings season that we've seen so far. Now we're approaching the end of the earnings season, and before this last when we interacted with you, you expected this earnings season to be soft, and that's what the large broader consensus was also on the expectation of the earnings season. But it's not been all that bad, and you have certain sectors that have surprised. After these earnings that we have seen, have you recalibrated strategy anywhere? Any changes to the portfolio? Anywhere where you were overweight and you've turned underweight, or the other way around? What's the strategy, and how are you, approaching the portfolio now?
Earnings season has been all right. I mean, it's kind of, and we've been quite, I don't know, we've been ever negative about earnings season. We said there might be some uncertainty on the segments, likes of, manufacturing and all, because of this tariff thing in Q1. But not, in Q4 of last year. I think that we were quite positive. Q1 can be a little bit depending on, which sector and which segment you are in. But in general, we are quite positive. I think we've been saying that because of the liquidity improvement in the system as compared to last year, from minus 3.5 lakh crore deficit to 1,40,000 or 50,000 crores of surplus, will have a huge impact on the corporate earning growth. Interest rates coming down will add a lot. So generally speaking, I think FY26 corporate earnings, in my opinion, will be better than the market expectations. A lot of downgrades happened in last year. I do think that you will start seeing upgrades from the Q2 onwards. Q1 still I would watch out, because I don't know what impacts have happened on the shipments and stuff like that. Sectors like banking and all might do well in Q1. But in general, I would say one should be, careful. But FY26, I'm very, very positive, and I think there will be upward revisions.
Right. Let me get your view actually on the entire theme when you talk about the power theme, the renewable energy theme. Good numbers also have come in some of these listed counters as well, which are there into the equipment manufacturing, solar equipment manufacturing as well. Is that a theme that you're looking at right now, Vikas, or are you re-looking at that theme?
We've been invested into more conventional energy than really or energy enablers. India is definitely staring at a shortage of power. Given our growth globally, there's a reinvestment happening in the entire energy space, energy transition. So it's an interesting play. I think only thing I would say is sectors like renewable, there's a lot of sort of overvaluation has happened. So one has to be very careful about risk reward before investing. In general, directionally we are positive on the sector.
6 months back, we used to talk about some of these themes within the renewable basket that you just highlighted. Even EVs was a theme that was one of the discussion points, even data center to add to that list. Given what's really been happening in the markets, do you believe that any opportunity in any such long-term growth pockets, where do you believe that the valuations have now turned reasonable, or you still believe that the valuations are a bit frothy?
We have never believed that, broadly, see, valuations plus minus 15% can go anytime depending on the markets. But I think valuations are in a reasonable space, both for the markets, some broader markets, some mid and small cap space, some specific sectors. There was euphoria. I think exuberance got built, euphoria got built. One has to be careful of those segments and spaces. It's irrespective. But I think the recent corrections have allowed to clear that excesses. And quite a bit is in market in general has come into a good range, and that's the reason you are seeing now market finding value buying at a lower level, and markets have come back. I don't think India will get cheap anytime sooner. So because of the growth nature and the interest rates coming down, so it's a futile exercise to keep waiting for the valuations to come down. At the same time, it is very sensible to keep avoiding euphoria-driven sector, narrative-driven sector. One has to stick to fundamentals. I don't think I want to buy a talk cheaper, which has good growth. It will not be available. So I think, constantly you have to keep looking for good growth stories, which India is all about.
Okay, Vikas, appreciate that view and appreciate you joining us this morning as well. Thanks so much for joining us. That was Vikas Khemani.